Hey everyone, quickly going to do a recap. Obviously, this is a very important week coming into the most important week or the remaining weeks. This is the week for the remaining of the year. CPI, FOMC, and then we got the biggest OPEX of the year back on Friday. Uh, at the end of the day, ES is at 3960. What I think is about to happen, let me give you an example. I mean, to give you what I think. I think by tomorrow, potential is that we coming in back to the MBB. We're probably going to hold this zone at 3900. I mean, I don't think we're going to break the 3900 tomorrow, and then it's going to be all about the CPI and also the FOMC. There are a few things that at the end of the day, and I think I talked about this. Last year we were talking about the inflation and how things going to change, and I do think we are unless the CPI comes much higher versus that 7.3% consensus. I think this inflation thing is not that it's going to be out of the picture, but market is now also going to consider the recession and the chances of the recession, and that means that different correlations in asset classes, different type of market, and maybe at some point that we get in this roll off on the OPEX and potentially the max is going to be January, then we are going to have a different market and price action. There is going to be tails that are going to matter more into 23, in my opinion. There is going to be significant moves. It's not just going to be to the downside. I think it's going to also be the risk is also going to be to the upside and the tails in the right side. So it's going to be a different market. But for now, I think the CPI is going to give us an indication of where we're going to go for the rest of the year into January OPEX. Is the 10 years, the bottom is in, and then we're going to go back up. Is Dixie, the bottom is in. The 103 on Dixie matters, is 10 years, let's say, matters, is this set. Just put it up, bring it up. What I'm looking at the 10 years is this basically candle is going to get the confirmation next week. If I look at it from a shorter time frame, I had red here, and that basically confirmed. Now, what I want to see here is that if this is it, or are we gonna this is just a fake out and then we come back lower. But I do think that we're still going to see higher rates potential. Again, it depends on what Jay is going to say. I had my targets here, and then the ramp into the end of the year, the beginning of the year. Again, this is some prediction that I have. Doesn't mean it's going to happen. If this is about to happen, potential is going to be the more of the downside. But I am open to any either or scenarios. And what I think and what I'm seeing from crudes actually. And I think when I go back on my 10 years over two and the crudes, I think it's this message that I'm getting out of the cruise is a little bit more into it than just the freaking 40% off of the highs. I think it's giving me some sort of an indication where specifically where the 10 over 2 is, that the market is a little bit probably start to shift that focus on where the recession is, and we are going to do putting out a detailed report like every year I do for what I see in 2023, and then now part of that is going to be the chances of the recession and what kind of a recessions we're going to have. There are four possible outcomes that I have in mind, and the timing that I have is a little bit different than most folks think. And we're going to talk about it. We're going to post it. Obviously, if you want to see all the details, Summit is the place to be. But having said that, what I think is that on paper, I know that the CPI is going to be an event. There is going to be a big move off of it, but doesn't mean that the move that we get on Tuesday is going to get continuation on Wednesday, because we got J Powell. The J Powell on Wednesday, it's not about the 0.5, but it's more about the what he's going to say about the wage growth that we saw, and which was a little bit immature the way he talked on end of November, 2 days prior to the NFP, plus the dot plot. And is it going to be higher? If it's going to be higher, which means the terminal is going to be higher, and it makes sense basically based on what we see on the consumers spending. When we see that the economy is still resilient, and we see what we see on NFP, and so we can expect a recession might actually happen a little bit later than sooner. But market is at some point is going to get out of this stickiness, and it's going to get more moves into the tells wider range. I think that's going to be the outcome in 2023. Again, back in April, I think I talked about it, that we could be in a market that after a few months we look back and we see that there was a predetermined floor, predetermined roof, and rearrangement. And you see, what we talk about, if you think about it on a weekly, monthly basis, this is what you have. This has been the range that you had all year. You think about where we are right now. This is August. This is July. This is June. This is April. Below the MBB now. Everybody's thinking that we might have to go down, and I get it. And I'm still thinking I'm having a little bit of a bias of a more downside. Maybe even this year doesn't mean that we're going to crash the 3,500, but unless the J is going to come out like with something really hawkish and CPI comes out 8 versus 7.3. But I don't even want to immediately say that we can't go higher and then touch the 20 SMA monthly at least, and that's going to take you to 43, 42, 34, 42, 40. Yeah, I mean, I'm not saying it's happening, but I'm saying that I'm just looking at it from every single perspective. But what I think is we can get a reaction off of CPI, and then the next day we can see a completely different reaction because of J. You can get a bullish reaction on CPI and reversal on Wednesday, or we can see a reaction negatively on CPI and then J comes out and reverse it. So either or make sure. But if I want to see where we are on Friday, are we going to be in a zone that we lose the 20 SMA on a weekly on Friday? If we close below the 20 SMA and 3,900, so that to me is going to be more downside. Specifically CPI, I think, give me a good indication on where NQ is going to be in the first quarter. If we really break that 200 SMA weekly and close below it, and by the end of the week, that means that we're going to test the lows and potentially for the new lows into the Q1, and that's going to take you to the 97.32. So I have no idea. Again, I have a bias that the CPI could be higher, but it's just a bias. And I did a thread in the community a few weeks ago, and why I think after the November numbers, but it can be completely different ball game. And I mean, I don't basically myself not going to trade off of it. I have some position which I'm going to close tomorrow, and I'm going to wait for the reactions. I mean, we've been doing a way better job on the trades that we take, without being really worried about where we are in the market and then trying to point fingers on the price action and waiting for that capitulation or buy the dip, or the bull market is happening, or bear market is here, or this and that. Just come on and work and trade it. We obviously post every stats, every trade, and getting announced live. Everything is there, transparency. So, and the record talks for itself. We have good days, we have bad days, but as a whole, I think when I look back, I think 2022 was one of the best years that I had in a consistent way as a trader, and I think the people around me and around us in the community has been doing really great as a whole. So having said that, Monday, I think that we can backtest that 3,900, we hold it, and then we go to Tuesday and see what the reaction is going to be. If CPI prints lower, we can see a bullish reaction, and then we got to wait for the J. And by the time that we come out of Wednesday, I think we have a very good indication that the market is going to trend into the end of the year, potentially coming out of it into the January OPEX. We got the week's expiry the week after OPEX. It's going to be on 21st. So the market is really supported by the wall. The money straddle is really elevated for the next 5 days. I mean, for the 10 days, and then for the next week, and the realizable and 10 days and 30 days. We talked about it. It's really been high, which matters. And now we got to see what's going to happen, and how implied wall is going to react if a market has that tendency to actually go higher, and if J is going to be off a little bit, or the CPI comes really negative, we can break the 4,100. But again, the other way around, we can see the much more downside, at least on NQ, and then that's how the market been this year. I would really want to focus more of where we are on Wednesday versus just really worrying about the next 2 days or 3 days into the Wednesday 2 p.m. or 2:30 p.m. on Jay's question and answers. So having said that, this is what I think, 3,900 tomorrow, and then we trade off of it. I think we're going to come out of this 4K range by the at some point Wednesday. But these 2 days 3 days can be really a lot of trappies, and people get biased. Don't be biased. Try to trade it until we get that clear green light, either or, and we go from there. That's all it is for this market recap. I try to keep these short, but we're coming back in 2023 with a lot more videos, quick videos on a recaps and what I think, and I'm going to start talking a little bit about macro. I've been getting a lot of messages. We've been really focusing on inside the community, but I do try to here and there at some point, once in a while, post something out there as for the macro stuff at the same time. Other than that, have an amazing Sunday night. Enjoy it, and we'll talk soon. Bye bye.